And today we're going to learn, can I invest in real estate if I have no money? The issue is not whether are you investing with no money, but whether you're investing with none of your own money. The simple answer is yes. Here's 7 methods you can use to buy real estate. The key to investing with none of your own money in real estate is simple. Bring something to the table. Investing in real estate with none of your own money requires using other people's money, or OPM. Number 1, wholesaling. In real estate, wholesaling is the act of placing a home under contract and then finding an interested buyer for that home. The way a wholesaler makes money is by selling it at a higher price than what they contracted it for. Usually the property is distressed, and that is why they're able to get it at lower than market value. The key to wholesaling is finding the property. What's so great about wholesaling is you never actually own the home. You just own the interest of the home. Number 2, using partners. For example, one person brings the deal or the experience, and the other person brings the money or the credit for a percentage of equity or cash flow. Number 3, lease option. Lease option gives the renter of the property the option or the ability to buy the home at the end of the rental period, also known as lease with an option to purchase. Number 4, using FHA. FHA stands for Federal Housing Administration, and it's designed for low to moderate income borrowers. The great thing about FHA is that it requires a low down payment, usually 3.5% of the loan, and it does allow for lower credit scores than conventional mortgages. As of 2019, FHA allows you to borrow 96.5% of the value of the home. You'll need a credit score of about 580. However, if you do have a credit score of 500 and 579, they can still approve you. However, you will have to pay 10% down as opposed to the usual 3.5%. Number 5, using a VA loan. A VA loan is a mortgage loan that is established with the United States Veteran Affairs. It usually is for veterans and eligible surviving spouses. What's so great about a VA loan is that it offers 100% financing, so you don't have to put any down payment. Also, the recipients don't have to be first-time homebuyers. Number 6, home equity lines of credit and home equity loans. Home equity lines of credit and home equity loans are both different. One of the biggest perks of home ownership is your ability to build equity over time. You can use that equity to secure low-cost funds in the form of a second mortgage, either a one-time loan or a line of credit, also known as a HELOC. The downside is that you're using your home as collateral. These types of programs do depend on your employment history and income, and also credit score. Use with caution. These have great benefits, but they also have a lot of disadvantages if used incorrectly. Number 7, hard money. Hard money is a type of loan that is secured by the property itself. These are usually individuals or companies. They are not banks. One of the advantages of hard money is that they are quicker for approval than traditional mortgages or traditional loans. They often don't check credit, and in many cases don't check income. The downside to hard money is that it is very expensive. Usually the interest rates are anywhere between 10 and 15%. You'll be lucky to get an interest rate of 10% for hard money. Also, they do not provide financing for owner-occupied residencies. And lastly, private money. This is very similar to hard money, with the difference being that these are individuals that will lend their own money, either be it in a IRA or some type of retirement, to another individual for an agreed upon interest rate. This is usually the gold standard when it comes to borrowing money because it is not as expensive and there are lower requirements for approval. However, it is challenging to find private money because usually these private lenders go off of experience or reputation. This is Daniel Dominguez, your Houston real estate leader.